190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.
Hello guys, and welcome to Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500. I know what you're probably thinking. You're thinking, the S&P 500, Max never normally covers this particular asset. And that's right. Up until now, I have rarely ever done any videos on the S&P 500. I usually post my videos in, once the market's opened for the Nasdaq 100. But going forward, every morning I'm going to be now analysing the S&P 500 as well, as it's, it is well correlated with the likes of the Nasdaq 100. But, this year we've seen a massive difference between the two. We've seen the Nasdaq 100 at one point down 34%, and the S&P 500 was only down 20%. So it's a huge 14% difference. So going forward, I will be analysing this market, which I hope you're all happy to hear about. But just before I start today's video, guys, anyone who's interested in joining my Signal service and copying my personal trades on a daily basis, then please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small joining fee of $29.99. But let's talk about the S&P 500. We've just come off the back of a very strong week indeed. I think we were up roughly 6%. Let me just have a look. Of course, we started down here on Monday. And so we're up around 6%, 5.7, 5.9, whatever you want to call it. So a lovely rally. And the reason being is there wasn't really any fundamental reason for this. It was more of a technical movement, if anything. Sure, we had some positive news out of Ukraine and Russia at the time, which was on Friday. There was an agreed deal that Ukraine could export the wheat that they have harvested so far this year. And unfortunately, over the weekend, Russia's now gone and bombed one of their main ports. So it just shows that, a deal with Russia at this moment in time is not even worth the paper that it's signed on. So I think that will start to show some negativity in the markets. But I am a seller here, guys. Reason being is because we are on the cusp of a very big week. This week, we have earnings from some of the biggest stocks in the S&P 500, in the Nasdaq 100, the likes of Apple, for example, Google, Microsoft, you name it. We are hearing from the big giants, and if they upset, then boy, we're going to see a pullback in the S&P 500. As well as that, guys, we have the Fed expected to hike interest rates this week. Is it going to be 75 basis point? Is it going to be the full 1 point? Time will tell. And then just on top of that, to top it all off, we have some huge economic data coming out this week as well. So very exciting times for the market. I expect there to be lots of volatility, but ultimately I do expect the markets to roll over. I don't believe we're going to break out here and go to 4,200. We could potentially go up to around 4,100, but then that's when you're met with this huge area of resistance, which is at 4,100. So I've probably drawn it a little bit too big. There we go, around 4,100. This area here, which is a 0.382 Fibonacci retracement area. I do think that we get rejected from there, and that's even if we get there. Sorry, but the RSI is well on its way to overbought territory. We're not quite there yet, but again, we're still in a downtrend. We're hovering around that 50-day EMA, and I am fully anticipating the markets to roll over. I do believe that the earnings would have been decent from this previous quarter, but it's the outlook that concerns me. And one thing that's made me laugh over the past couple of weeks is that, I listen frequently to the likes of Bloomberg and CNBC, and so many analysts are coming out saying, I believe that this earnings quarter is going to be amazing. And I think that companies have done better than what everyone's expected. And I kind of take a step back and I think, well, okay, let's say if earnings are just as bad as what people are anticipating, or maybe a little bit better. Okay, well then that's that to me doesn't really fix the issue, because in 3 months' time we're going to have earnings once again. So all that does is basically delays our massive pullback for another 3.5 months, because right now bills are not as high as what they are going to be very, very soon. We're entering winter, okay, and to heat homes, it is going to be so expensive for the average household. I think any excess cash that did previously exist is no longer going to exist going forward into the winter months, until we wait for wage growth to increase and to catch up with inflation, and as well as that, we do need inflation to pull back ever so slightly as well. So I just see, the outlook for these stocks and for these companies' earnings to be terrible. I really do. I think winter's going to be very challenging, and ultimately we're going to get a pullback. So I look at this rally. I do believe it's a bear market rally, and I would be selling the market here. I really do not like the S&P 500 up at these high levels. I actually opened a sell position up near 4,000 last week, which my signal team have got. Have also copied in. So if you'd like to know where my take profit and stop loss is for that trade, then definitely make sure you go and sign up to my signal service at dailymarketmovements.com. But that's it for today's video. You can catch me back here tomorrow for another update on the S&P 500.
Million barrels per day.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is